If you like the wheel strategy for safe and consistent income, but have a small account or are just getting started, I got you covered. In this video, I'm going to dive into 5 stocks under $30 that I like for August 2025. Let's go. Hi, my name's Gautam, and on this channel, I talk about the stock market and achieving financial freedom with the power of options trading. So if you enjoy content that can help you retire early and achieve financial freedom, don't forget to hit that like button, subscribe to my channel, and share this video with your friends and family. Also, if you are new to the options world or are simply looking for one-on-one guidance to help you shortcut years of trial and error and avoid costly mistakes, click on the coaching link below and I'll be honored to help you out. My first pick is SoFi Technologies. And for those not familiar with SoFi, SoFi is a leading fintech company that's rapidly expanding its user base, particularly among the younger generation and those seeking alternatives to traditional banking. It's actually one of my favorite stocks to trade under the $30 price point, as the stock offers great premiums, and I also believe it has a strong future in the times to come. With that said, let's check out SoFi's Q2 earnings that it reported recently. Looking at the net revenue, SoFi achieved a record adjusted net revenue of 858 million, marking a 44% year-over-year increase and exceeding analyst estimates. The company posted an adjusted earnings per share of 8 cents, significantly beating the analyst forecasts of 6 cents. Fee-based revenue surged 72% year-over-year to a record 377.5 million, largely driven by the growth of SoFi's loan platform business. Looking at member and product growth, SoFi saw significant growth in its customer base, adding 850,000 new members, reaching a total of 11.7 million members and 1.26 million new products. Both metrics represent a 34% year-over-year increase. Looking at profitability, SoFi reported its seventh consecutive quarter of GAAP profitability with a GAAP net income of 97.3 million and a diluted earnings per share of 8 cents. Adjusted EBITDA increased by 81% to a record 249 million, representing a 29% margin. Following the strong earnings performance, management raised its full 2025 guidance, now expecting adjusted net revenue of approximately 3.3 billion, which is a 30% year-over-year growth, and diluted earnings per share of 31 cents. So all in all, SoFi's Q2 2025 earnings results demonstrate strong growth across its various business segments, particularly in the financial services, and continued improvements in profitability and credit quality. The company's diversification strategy appears to be paying off, positioning it as a comprehensive digital financial services platform. Looking at SoFi's 6-month chart, it's currently right in between the top and the middle of the Bollinger Band, trading around $22 today. And as you can see, right after the earnings, it jumped all the way to 25.11 and then came back inside the Bollinger Bands. And as the Bollinger Bands have narrowed down, the volatility has decreased after the earnings. And again, it's sitting at this $22 price point. Now, if I were to make an entry into SoFi right now, I would look at these support levels, which is the bottom of the Bollinger Band right here at the 2064 level. And then there's further support at the $18 level. So let's pull up the options chain and see what choices we have and what kind of premium they offer. So if I go out 36 days to the September 12th options chain and look right here, we said the bottom of the Bollinger Band was around $20.60. So since we don't have a $20.60 strike price, the closest we have is a $20.50 strike price. So looking at the 2050 strike price, that is a delta of 31, and it might be slightly higher for my taste. So looking at the next strike price, which is a $20 strike price, that is a delta of 26. And considering that the bottom of the Bollinger Band was at $20.60, and this would be under the bottom of the Bollinger Band at the $20 level, I'd be comfortable selling some puts at the $20 strike price. And going with that strike price, we could probably collect the mid price in between the 62 cents and the ask, which is the 65 cents. So probably about 63 cents, or that just means that $63 per options contract. And for that, you would have to put up a collateral of $2,000, which is simply taking this $20 strike price and multiplying it by 100, because one options contract represents 100 shares. So again, if you're a small account just getting started, all it would take for you to sell one options contract on SoFi is just about $2,000. And for that, you would collect a premium of about $62 or $63, going about 36 days out. and that would yield a return of 3.2%, which is fantastic. My next pick is actually not a stock, but an ETF trading under the symbol SOXL. It's an ETF that offers 3x exposure to the semiconductor sector, which continues to benefit from the global chip demand and the AI revolution. SOXL's high implied volatility provides you juicy premiums, although with high volatility also comes a higher risk that you should be comfortable managing. With that said, let's check out the top 10 holdings of SOXL. We have AMD at 8.76% of the total holdings. We have Nvidia at almost 8%. And then we have Broadcom, Texas Instruments, Qualcomm, Micron Technology, Marvell, Microchip Technology, Lam Research, and Kia Corporation. So for a small ETF under $25, it gives you exposure to all these fantastic semiconductor companies and at the same time provides you fantastic premiums. Now, because leverage ETFs are balanced every single day and there's a lot of volatility, I wouldn't recommend holding these for a long period of time, but rather quickly get in and out and take your profits and move on to the next play. My next pick is American Airlines, and American Airlines is one of the largest airlines in the world. With its stock price around $11.71 right now, it's a great stock for beginners, does not require a lot of capital, and also offers decent premiums. So with that said, let's check out the latest earning release from American Airlines that they reported on July 24th. So American Airlines achieved a record quarterly revenue of $14 billion in Q2 2025. GAAP income was $599 million or 91 cents per share. Excluding special items, net income was $628 million or 95 cents per diluted share. This adjusted earnings per share of 95 cents beat analyst expectations of 78 cents by a significant margin. Now, as far as the third quarter outlook goes, the company adjusted its third quarter 2025 earnings guidance to a loss per diluted share anywhere from 10 cents to 60 cents. So all in all, American Airlines reported strong second quarter earnings driven by record revenue and outperforming analyst expectations. However, investor sentiment was cautious due to revised outlooks for the remainder of the year. So looking at the American Airlines 6-month chart, they reported earnings right here on July 24th. So as you can see, based on the weak Q3 outlook, the stock went down from $12.60 to almost $11.82, and since then has been consolidating. Now, having said that, it's still a decent company, and I don't believe American Airlines is going anywhere. And for a price of $11.73, if you're a beginner options trader who's just getting into the wheel strategy and getting started, it's still an attractively priced stock. And as you can see from the chart right here, it really doesn't do much and is not extra volatile. So would be a great stock to get you started and start practicing the wheel strategy. So having said that, it's currently trending towards the middle of the Bollinger Band right now. And if I were to sell puts on American Airlines and get the wheel strategy started, I would look at these support levels right here. So we have some support at the $11.10 mark, and then we have additional support here at the bottom of the Bollinger Band, which is $10.90. So keeping those prices in mind, let's pull up the options chain, and I'm going to go out about 36 days. So for some reason, we don't have the delta loading in the options chain right now. But looking at these strike prices, if you go with the $11 strike price, 36 days out, that would give you a premium of about 33 cents, or the mid price would be about 34 cents or $34 per options contract. And that would be a return of 3.24% on your capital. Now, if you want to be super cautious and go down about $1.20 from the current price, that would be the 1050 strike price. And for that, you could collect a premium of about $21, which is in between the bid and the ask right here. And then that would give you a return of 2% on your capital. Also looking at the open interest and volume, we have a lot of open interest and volume at this $10.5 strike price, more than any other strike price that I can see above or below the 10.5 strike price. So I'd be comfortable going with this strike price. My next pick is ticker symbol APLD, or Applied Digital Corporation, which is a data center and digital infrastructure company that designs, builds, and operates high-performance computing facilities primarily for the AI, cloud, and blockchain applications. While the company is still unprofitable at the moment, its rapid revenue growth, large-scale partnerships, and positioning in the AI infrastructure space offer a significant upside potential. APLD is up 83% year to date, and if you look at the 1-year chart, it's actually up 259%. APLD published results for its fiscal Q4 after the market closed on July 30th, and the report and investor conference powered a massive rally for the shares for the company's share price. The data center specialist reported a non-GAAP loss of 3 cents per share for the period, which came in better than analyst expectations of 16 cents. Meanwhile, sales for the period came in at 38 million, which beat the average analyst forecast by about 880,000. Sales were up 40% year over year for the period, and the company paired the encouraging results with huge news about its relationship with CoreWeave. Applied Digital announced that it had entered into a $7 billion 250 megawatt data center contract with CoreWeave at the beginning of July, and news that its partner had quickly decided to sign on for extra processing megawatts prompted explosive gains for the stock. So again, while the company is not profitable, its partnership with CoreWeave and the thriving AI sector makes this a strong stock to watch out over the next few months and years. Looking at its 6-month chart, it's currently trading at 14.15 towards the top of its Bollinger Band. This would be a great point to sell some covered calls on APLD if you already own shares. If you don't own shares, the next logical support point that I see is the middle of the Bollinger Band, which is the 1150 strike price or around 1156. So let's pull up the options chain and see what kind of premium we could collect. We could go out 36 days. Again, the deltas are not loading up at the moment. But if you look at the 1150 strike price, there's a wide gap between the bid and the ask. So I don't like this strike price right here. I could just go over to the $11 strike price, and that would actually take you slightly lower and safer. And also looking at the bid and the ask, this is obviously much more decent bid and ask spread compared to the 11.5 strike price. So I like this strike price here. You could potentially get this order filled at a mid price of about 35 cents or $35 per options contract. And for that, that would give you a return of 3.29% on your capital, which is fantastic. Again, to sell one options contract on APLD at the $11 strike price would cost you $1,100, which is the $11 strike price times 100 shares. My final pick for this video is actually Ford Motors, ticker symbol F. And Ford needs no introduction. Ford's an iconic legacy automaker and is a great stock for somebody just trying to get in and practice a wheel strategy. Attractively priced around $11, it's relatively stable and offers decent premiums. Let's quickly look at the Q2 earnings that Ford reported on July 30th. Ford reported a record revenue of $50.2 billion, surpassing analyst expectations, representing a 5% increase compared to the same period last year. Earnings per share also came in at 37 cents, beating analyst expectations of 34 cents per share. Adjusted earnings before interest and taxes were about $2.1 billion, and this figure included an $800 million charge due to the tariffs. So despite strong revenue, Ford posted a net loss of $36 million due to special charges for a field service action, including an SUV recall and the cancellation of their EV program. Overall cash flow was $6.3 billion and adjusted cash flow was $2.8 billion. Ford ended the quarter with $28 billion in cash and $46 billion in total liquidity. So all in all, Ford achieved strong revenue but faced challenges from the tariffs and one-time charges from their EV program. Looking at Ford's 6-month chart, it's currently trending towards the middle of the Bollinger Band, and the next level of support that I see is this 50-day moving average, which is at 1094. But considering it's only about 35 cents lower than the current price, I'd like to be a little safer. Go towards the bottom of the Bollinger Band, which is $10.72. So let's pull up the options chain and see what kind of premium we can collect. We can go out 36 days to the September 12th options chain and look right here. Now we don't have a 1074, but we either have a $11 strike price or we have the 1050 or the $10 strike price. Considering Ford's trading at 1127 and I don't want to go at the money, I'd like to be a little safer. I'd be comfortable going with the 10.5 strike price. And if you click on the 10.5 strike price, you can get that order filled and collect a premium of $15 per options contract. Now, I generally like to target a return of anywhere from 2 to 5% on my put options when I sell my put options. But since Ford is a fairly stable company and is not too volatile, right now we're only collecting a premium of 1.5%. Again, Not ideal, still a great stock to get started and practice a wheel strategy. So that's it for today's video. If you enjoyed it or learned anything useful, don't forget to hit that like button, subscribe to my channel, and comment down below with your thoughts or questions. If you would like one-on-one coaching directly with me, click on the first link in the description below, and I'd love to help you out.